It's Craig Haskell, author of The Inside Game to Syndication Wealth and founder of the Value Hunt Academy, where we help real estate professionals break out into building their wealth, syndicating those great deals they come across. Well, I want to welcome you to Part 7, the syndication business wealth building opportunity. And guys, in this 7-part video training series, we are digging into the syndication platform big time. And it really is a much needed training series. So why is that, Craig? Well, many real estate professionals are quite honestly confused. They're mystified. They really lack the understanding of what the syndication business is all about. So in this training series here, we're going to be answering the basic syndication questions to help you better capitalize on this platform, to help you build your wealth. I mean, come on, guys, it's your game. But unfortunately, too many real estate professionals are wasting and missing wealth building opportunities because they're scared of syndication. And I want to change that. So let's go ahead and review what we've covered so far, right, in the 7-part training series. So in Part 1, we covered what a syndication is, the starting point. We talked about the basic structure, the foundation of a syndication, who the players are, how a syndication actually works. And in Part 2, we covered how a syndicator actually makes money. What types of fees can a syndicator actually earn? What are some of the back-end profits that you can expect, the syndicator expect? Why syndication is such a great wealth building opportunity? And then in Part 3, we covered the complete journey a syndicator takes. What's the big picture? What's the roadmap of a syndication? Well, we talked about it in Part 3. What are the 20 steps of a syndication process? We also talked about that. We showed the 20 steps. All right. So in Part 4, we covered the 4 big mistakes that new syndicators make, and we talked about how to avoid them. And in Part 5, we talked about the money raising process. There really are 8 steps to this process that you need to follow. And we talked about those 8 steps. We went into depth. And in Part 6, the last part we just went through, I walked you through a syndication case study. And this case study was with a couple of my students that went full cycle on the first deal. They bought and they sold their first syndication. You got a chance to see behind the scenes of that syndication process that they went through and how these guys made it through all the ups and all the downs. You got to see all that in Part 6. Now in Part 7, this is really the final part of this video training series. I want to walk you through the financial numbers on how your syndication business might look. I'm going to put it all together for you. How can the syndication business create an income stream while at the same time building your wealth? How does it do that? How do the fees and the back-end profits add up? How do they stack up over that business life cycle? How might that look? So I'm going to show you the money. We're going to go through a complete scenario so that you can see the money. Heck, I'm going to show you the type of money you can make over a period of time. I'm going to show you what the big picture looks like. I've created a very simple syndication model plan for us to follow. We're going to create this model with kind of a new investor in mind. Now, experienced investors can simply really take the numbers that we're going to put up here. I'm going to show you. You can multiply it by some X number because of the experience level. Now, the purpose of this model, the reason why I'm doing this is to give you a big picture. I want you to see the potential of a real estate syndication business. What does it look like? What's the blueprint? And this blueprint is actually going to be modified. And I really want you to conform it to your real world conditions. But what I'm going to go through here is a starting point. Okay? So let's walk you through the structure and some of the assumptions that we're going to go with. So we got some assumptions here. You can see them right here, all the bullet points. There's many ways to structure a partnership with investors. You may have a fantastic deal that has a lot of built-in equity where you might want to take less fees and more back-end profits. It really depends. Or you might have a deal that has a lot of construction where you get paid for those construction fees to oversee the construction process. It just depends. I want to keep it very simple. I've created assumptions based on what it might look like for the average syndication model, for the new syndicator that doesn't really have a whole lot of experience or doesn't have a whole lot of money. Again, guys, there is no hard and fast rule on how to structure your partnership, right? You structure your own partnership. I'm just kind of giving a glance at what this might look like, and I'm putting together a sample model syndication blueprint for you. So as we kind of go through some of these bullet points here, this is how we're going to structure our full cycle syndication model. So let me go through the bullet points right here. So first thing we're going to do is we're going to buy and sell properties within 8 years. And so that means in year 1 we're going to buy our first property, and in year 8 we'll be done selling all the properties we bought. And then we're going to buy one property every year for 5 years. And then we're going to actually sell a property for 30% more beginning in year 4. And you'll start to see some of this stuff as I show you the spreadsheet. Now we're going to get started buying a $500,000 property, and we're going to raise $200,000. And for all that time that it takes us and all the energy, we're going to take an acquisition fee of 3% of the purchase price. And we're going to manage the partnership, we're going to manage the asset, we're going to manage the property managers. So we're going to take a 1% fee of the value. And as we go to sell the property, there's a lot of time involved with that. We're going to take a resale fee of 1% of the sale price. And for building value and putting this whole package together, we're going to take a sponsor fee of 25%. That's you, the syndicator, is going to get 25% at the back end, right? And I'm going to show you what this might look like over a full 8-year cycle, all right? But I want you to keep in mind that I'm just playing with the numbers. These numbers could be higher, these numbers could be lower. It's really based on your unique circumstances. So I really want you to take this model, go into Excel, put together a spreadsheet, and kind of put in your numbers, what they might be. I'm just giving you an example of what this might look like, right? So you make your own assumptions and try this out. All right, here's year 1. I want to welcome Sammy Syndicator to this, because we're going to actually do a model, and the guy that's doing this is Sammy Syndicator. And since Sammy's new to the business and he's still learning the business, Sammy has to assume he's going to buy one property for $500,000 right here. One property for $500,000, and he's going to raise $200,000. That's what he's going to do. And I want you to remember that Sammy's buying with a margin of safety. And we talk about this, the Value Hunt Academy, what a margin of safety is. Really, Sammy's first deal has really got to be a no-brainer. It's got to be a no-brainer. Investors say, wow. I call it the wow factor. So when you show them the deal, they go, wow. And our first deal, we're going to take a 3% fee, which is $15,000. We're going to take an asset management fee to oversee the property, and that's $5,000. For the first year, we're going to generate $20,000 in fee, right? 15 plus 5 is 20. That's going to be our first year. Let's go on to year 2, and let me show you about year 2. So in year 2, Sammy here is going to buy more property. He's already kind of built up his database of investors. He's got existing investors to go back to. So, we're going to buy a little bit bigger property. And our goal is to buy a property that's $1.5 million, right? And we're going to raise $600,000. Again, we're going to take a 3% acquisition fee, and we're going to take a 1% annual partnership fee or asset management fee, however you want to call it, and that's $15,000. So down here, our total for year 2 is $65,000. Now, if you add the numbers, 45 and 15, that's 60,000. How do we come up with 65? Stop for a second. Any ideas? Well, remember, the annual partnership fee is based on the value of the property, and that's paid each year. So if you take 45, we're going to take that 5 right there in year 2 as well, right? So we're going to take 45 plus the 15 that we got this year, and we're going to add in last year's, right? So we're really going to make, that's $65,000. 45 plus 15 plus 5 is 65. That's how it works out. And so we're starting to raise a little bit more money. Investors are starting to get to meet us. We've got an existing pool to go through to raise the money. And then we get our second deal done, right? We're a second deal. It's pretty cool. So let's go on to year 3. And then really after building the foundation, Sammy's really got the opportunity to start doing bigger deals. He's got more money coming at him. And so we're going to buy a $3 million property, or we're going to buy multiple properties that equal $3 million, and we're going to raise $1.2 million. Right? He's already got an existing database to pull from. Guys that in his last 2 deals are excited about what's going on. They want to be on the next deal. And he's had other investors coming to him talking about investing. So it should be pretty easy to raise $1.2 million. We're going to again take the 3% acquisition fee. We're going to take the 1% asset management fee or partnership management fee. And now we're at $140,000 for the year. Again, we added in the 5 and 15 into this year, into year 3, and that's how we came up with $140,000. Okay, so let's move on to year 4. Year 4 is going to be a cool year because this will be the first year we're actually going to sell a property, but we're also going to buy a property. And you know, Sammy starts to notice that, hey, my business is starting to flip-flop a little bit. I'm having an easier time getting investors. I'm having a harder time finding great deals. And you'll notice that too as you get to that stage. But we're going to buy bigger properties. Again, we're going to try and buy $5 million worth of property. Could be 1 property, could be 2 or 3 properties. And we're going to raise $2 million. $2 million of capital. And this is where it gets interesting because this is the first year that we're actually going to sell a property. So we're going to sell a property for $650,000. Right? And that $650,000, we're selling this property right up here. The first property we bought for $500,000, we're now selling for $650,000. That's a 30% increase right there. We're going to take a 1% resale fee, and we're going to take a 25% of the back end. So if you added up all the fees that we're making for asset management fees and some of the acquisition fees, plus the back end profits and actually a little resale fee there, we're now at $294,000 just this year alone. We generate $294,000. Okay, but guys, I want you to be careful here in year 4 because where a lot of syndicators make a big mistake is they start getting so many investors that want to buy deals, and a lot of syndicators get greedy. They really do. They want to go out and start earning more fees and then start buying more properties that are more risky. And they don't really offer that margin of safety. I don't want you to do this. I want you to only buy great deals. I want you to follow the plan and only buy great deals. Okay? So let's go on here. Now, in year 5, it's the last year that Sammy's going to buy a property. And his syndication business has been doing pretty good. He's stuck to his plan. So he's going to buy $8 million worth of property. Again, it could be multiple properties, but he's going to buy $8 million. He's going to raise $3 million. And quite honestly, that should be pretty easy to do because now we've got more money than we have good deals. So let's use that assumption, and we're going to still get our 3% acquisition fee. We're still going to take our 1% annual partnership fee or our asset management fee. We're going to sell here, right? It's time to sell the year 2 property, this $1.5 million property. We're going to sell it for $1,950,000. That's 30% more. I mean, come on, 30% more, guys. We're value add people. We're only looking for great deals. That should be easy to do. We're going to take a 1% resale fee, 25% of the back end, and in year 5, because we sold a bunch of properties, we bought a bigger property, we generated a nice income of $547,000. All right, starting to shape up pretty good, isn't it? Let's move on. There we go, right there, bang. I just went ahead and rolled it all out for you right there because all we're going to be doing in year 6, year 7, year 8 is selling properties. And as you can see, we've really built up our wealth pretty good. $2.8 million. Very conservatively, we built up $2.8 million. We only buy great deals. We only use the real estate value investing principles that we talk about in the Value Hand Academy, and we'll work with great investors. We weren't influenced like many people are by getting big too fast. We took our time. We only bought great deals. And you know what? Sammy's investors are really his biggest fans. They're looking for him to keep investing. They want to really give him more money because he's been very successful. They're very confident in his ability to manage their money. So as you can see right there, that's a nice way for a person, a syndicator like yourself, who is a real estate professional, to take advantage of some of the opportunities you have in your business and start doing syndications. And I've only done a very conservative, spreadsheet here. Many of you in the business have tons of contacts. My first syndication back in the late 80s, early 90s, I raised $1.5 million. I mean, I was in the business. I had a brokerage business and a syndicate, brokerage business and a management business. I had some contacts, and I raised $1.5 million. I'm saying, whoa, pony. Let's just start slow. Let's just raise 200. Let's just buy a $500,000 property. To show you, to keep this conservative, Sammy did pretty good on his deal. So let's go through a little bit of review here, right? In this 7-part video training series, we've uncovered all the basics of a syndication so that you, as a real estate professional, can understand this and understand the syndication platform. In part 1, again, I just want to summarize, we covered all the syndication starting points. What's a syndication? What's the foundation of a syndication? How does a syndication work? Who's involved with it? What are some of the players? And in part 2, we covered how a syndicator actually makes money, the fees and the back-end profits. In part 3, we covered the journey. What does the map look like? What's the big picture roadmap of a syndication? We talked about that. And in part 4, we talked about the big mistakes and how to avoid them. It's real important for you guys to watch that video because it'll help avoid costly mistakes for you. And in part 5, we talked about the money raising process, the important process, the 8-step process that you need to follow. We talked about that. In part 6, I walked you through a syndication case study. This is a case study with actual students of mine, so you got a chance to see what it looks like to go full cycle on a deal. And in part 7, we just talked about, we're starting to put this whole package into what does it look like to build a business? What does the syndication business look like from a number standpoint? So I just showed you that. Now, I've created over 2 hours, guys, 2 hours of training on this syndication video training series. It's 2 hours. You think about it. Each of these videos is probably 20 to 25 minutes in length. I want you to take advantage of this opportunity. I want you to learn more about syndication. It's your game. Really. So, as I talked about in the beginning, my goal of this training series, in my heart, was to shed some light on this wealth building opportunity, the syndication business, to demystify it, to show you what it's all about, so you could take advantage of it. You're in the business. You're already in the real estate business. And I think you should seriously consider the syndication platform. You got a lot of talent. You got experience to draw from. And if you think about where the stock market and the financial markets and the world economies, we're having a lot of problems. Investors are having a hard time placing money and getting any kind of return. It's a great time to be out talking to investors. So the time is now, guys. I want you to get started. I want you to go make it happen. Okay? It's up to you. Now, for those of you who want to get more help, I want you to go to the Value Hound Academy. There's all kinds of information. It's loaded. We got interviews, we got videos, we got articles, all about the syndication process from every aspect. It's not just raising money. We have a whole series on how to manage properties, the construction process, some of the legal things you got to watch out for. We have the whole process right there. So dig into that website. If you want more information, if you want more coaching or training, we have some programs that we offer, some syndication and money raising programs. Or you might want some coaching or mentoring. That's available to you. All you got to do is contact Nikki. You can see it right there. Contact Nikki. Nikki, Nikki, at valuehoundacademy.com. Send her an email. Let her know you have an interest in a program or some coaching or something. We'll get on the phone and we'll just talk. We'll see how I can give you some direction on where you might want to go. It doesn't cost you anything, so I would take advantage of it. It's something you want to do. So to sum up, I've really enjoyed going through the 7-part video training series. I hope I've given you some good information, something to chew on, to give you some ideas, things to think about. We got more help for you if you want to dig into this stuff. But I appreciate you taking the time to go through this. Go through it again and again until you really get some of these ideas. Okay? I look forward to helping you guys reach for the stars. Good luck to you.